The October retail sales, they showed the first decline from record spending in each of the past 9 months. For the month, Australians spent $35 billion, marginally down on September. But let's bring in here David Rumbens, Senior Partner at Deloitte Access Economics. He knows his way around these retail numbers. David, always good to chat to you. Many thanks for your time. I mean, at some point, higher interest rates, higher energy prices have got to catch up with consumers. Is this, do you think, the first sign?
Look, it is the first sign. As you say, we've had a lot of strong months. It may not be the end of it. I mean, the anecdotes we're getting is that the Black Friday sales were very strong as well. So, but we would expect some catch-up to occur, and this is the first sign.
Okay, so then it's a situation right now where one of the stories we've reported on is that because of supply chain issues, a lot of retailers have filled their warehouses. Kogan had problems with that last year as one good example, but others as well. We're going to know between now and Christmas just how they're faring, because if we see deep discounting in the advance of Christmas, you're going to know that really those retailers feel as though they've got too much stock and need to clear it out.
Yeah, and I think we've seen some of that this month with the Black Friday sales that have become more popular, not only because people are willing to spend, but they are understanding that the tight broader environment, the cost of living concerns, and they're looking for a good deal. So sales have will likely to show to have gone up through November through that sales period. But it may be, as you say, with a lot of discounted stock.
All right, so then one issue that I've talked about with a number of people is really a point whereby you've got, say, for example, the growth in price and volume right now. These two things are about the consumer's ability to be able to absorb price hikes. That's what this is all about, isn't it?
Look, that's right. And most of the sales growth that we've seen this year has indeed been in prices. So, compared with a year ago, sales are up 12%. Now, you'd think normally, that is fantastic for retailers, but most of that is price growth. Retailers facing higher costs for their products, passing that on to consumers. And so far, consumers have been able to absorb that to an extent, but we know that savings rates are coming down. People are tapping into those savings, and the ability to absorb that is going to be tougher going forward. Hence what we've seen, even in the September quarter, most of the sales growth was in prices, not so much in volumes. We don't know with these October numbers, but there's probably some price growth there, which means sales volumes contracting as well. And that's likely what we're going to see more of as we get into 2023.
It's almost as though there's a brick wall in front of consumers and therefore in front of company profits and indeed the Australian economy. Because, if you're right and prices are rising and volumes are contracting, at some stage that's got to catch up with the whole economy.
Well, look, it is. And we'll see that, come out in things like an increasing rate of business failure over time. We'll see a higher rate of unemployment or less strong employment growth. Employment may not fall, but we may not get the growth. Indeed, we've already started to see that. We've only seen 30,000 jobs growth over the past 4 months. The previous 4 months was 150,000. So that momentum is starting to shift down. Now, if we're talking retail, it may still be a good next few weeks. All the signs are that Black Friday was pretty healthy in terms of foot traffic, in terms of overall value of sales. That may still go through to Christmas. It's probably the period after Christmas as we get into the first quarter of 2023 that becomes more difficult.
It's going to be interesting to watch it. David Rumbens, always good to talk to you from Deloitte Access Economics. Many thanks for your time.
Thanks, Ross.